Good morning, good evening. Welcome back to another episode of the Coffee Hour. Today we got a little bit of news, okay? It's a really light day today, unfortunately, or actually, I should probably be a good thing, but we do have a couple of things we're going to go over. All right, one of the big things we're going to be talking about is going over a ETF fund manager, especially in the high yield space. We all know who this one is, Rexshares, and it looks like they are liquidating, okay? So I'm going to kind of just provide some of my thoughts on there and give you guys kind of just some commentary. Okay. I don't think it's anything to freak out about. We'll also be talking about some memory upgrades that happen and some huge wins. We'll also be talking about some new ETFs that are coming out from Amplify. Okay. So today's going to be a kind of a different type of stream, not so much news driven, because honestly, there really was not a lot of news. I think the whole world, including the whole market, is waiting on this negotiation, this deal to finally come to a close. So while I get set up here on X, as always, you guys know I appreciate every single one of you for joining me on this. The whole market is. Oh, there we go. We'll pause that. All right. Yeah. Anyways, as I was saying, you guys know I appreciate you guys. I hope everyone had an amazing weekend, a somber weekend, depending on where you sit, or at least a memorable weekend. All right. Because remember, the weekend was about our troops, so that we may never forget the ones that made the ultimate sacrifice. Okay, let's move on, ladies and gentlemen. Let me see who we got up in this chat. We got a live chat today. Whoa, let's go. All right, we got Champs 1232. Yo, bro, what's up, man? Hey, welcome. We have Carl H 6988 first. Well, unfortunately, Carl, looks like Champs beat you out, but welcome anyways. All right, we got Bon up in the chat. Hi. And we have Yo from Retire on Dividends. Make sure you guys check him out. All right. He covers a lot of different high yield ETFs. And he also has a crypto channel, Retire on Bitcoin, if I'm not mistaken, or Retire on Crypto, if I'm not mistaken. We got Grumpy Toad up in the mix. Yo. We also have Dividend Degenerates. Evening, peeps. All right, looks like the gang is here, says Grumpy Toad. We also have Skeptic up in the chat. Appreciate you always joining. Sold my LLII and my GIF in the after hours market today. I think that was at least a good move, because they are liquidating. And we also have Bond saying, hey, peeps. We got Glenn Rao saying, hello from Australia. Wow, look at that. We got a whole international crowd up in here, man. Look at us. Look at us. We got an international crowd up in this community. Oh, we got the Rodstaman saying the power hour. And I have to agree, because I also have my cup of coffee. And in case anyone's wondering what that says, right on the cup, it was actually a gift. It says losers make excuses, winners make money. So it is a quote I try to remember from time and time again. Let's see. Disappointed in the Rex liquidations. I think some people are as well, but no one's more disappointed than Rex. No one's more disappointed than Rex. We have Health and Wealth. Hey, what's up, man? What's happening, everyone? Guys, you should check out Health and Wealth as well. He also runs a YouTube channel. Definitely worth taking a look at. All right, let's see what we got. So we're going to cover that here in a moment. Let's see. Keep seeing DRAM will explode tomorrow. Will it? Well, we got some news to cover regarding the memory trade. Okay. And it is a little bit of concerning. All right. But I think it is still very, very low risk. All right. So a lot of things to come. All right. Let's see. Okay. Low AUM. That's probably the answer. All right. You kind of stole the thunder there, Grumpy Toad, but it's A-okay. All right, ladies and gentlemen, let's get into it. Appreciate you guys joining me for this Tuesday, May 27th, or actually, I'm sorry, May 26th stream. All right, so let's get into it. All right, so first up, we're going to just take a quick look at the heat map like we always do, and quick shout out to the 31 viewers on X, 46 viewers, 47 viewers on YouTube. Appreciate you guys joining me for this stream. Remember, guys, I will be moving the streams over to this channel, so make sure you guys subscribe there so you guys can get the streams. I will stop streaming on my current channel, which is the Dividend Capitalist, sometime in the future. I haven't quite decided yet. Okay, so anyways, here we are on the heat map. As you guys can see, Nvidia had a little bit of a sell-off, not too much. All right, Microsoft also down. SaaS apocalypse is still alive and well. No love there. Semiconductors are doing a-okay, it looks like. As a matter of fact, semiconductors, DRAM, SMH, all doing exceptionally well. All right, we have the semiconductors up here as well. And Nvidia is just not getting any love, but they have a big event coming up in June 2nd, I believe. All right, Jensen Huang's already been spotted in Taipei. That is Taiwan. Okay, he's in Taipei, so he is already there. And I suspect there's going to be a large announcement of potential partnerships and deals with some of the semiconductor chains that are out there. The companies, I don't know. I'm trying to front run it. I'm trying to think if I want to get into a Taiwan ETF at this point. There's only 2 that I found. Most of the ETFs are heavy semi. So, if you want to front run that and try to get a couple of quick gains, could be a potential play. Obviously, not financial advice. Aerospace defense looking good. Let's see. Consumer defensive actually sold off. Coke, Pepsi, Walmart. All right, healthcare also not doing too hot. Energy, of course, it's finally coming down. Thank God. All right, let's take a look at the futures. All right, we got energy below $100. Okay, let's get a round of applause in there. All right, because man, we've been waiting for this energy to come down. Let me see if I can find it. There we go. All right, so finally, energy is down, and that is what we want to see because energy has been absolutely terrorizing the markets. All right, and not only that, but the rest of the globe. We have the S&P 500 futures up 11 basis points, Nasdaq up 17. And the 10-year was actually coming down a bit. So the 10-year was coming down a bit last I checked. I don't know if it's back up, but it was down last I checked. Okay, S&P 500 up 61 basis points. All right, DRAM, the one and only DRAM, up 14.56 for the day. All right, congratulations to anyone who did buy in this when it did dip not too long ago. All right, it did have a little bit of a dip not too long ago, and people bought around here, I think. It was around here. So, I mean, you should be sitting pretty. All right, you should at least be a little happy. Year to date, 117%. God, 117% on this bad boy. DRAM, all right? Again, for any new viewers, the big hoopla about DRAM, the ETF, is it has exposure to the 3 manufacturers of not only DRAM, dynamic random access memory. These chips are used by Nvidia, AMD, but also HBM, high bandwidth memory, which is the next evolution. All right, it's going to be the next chips for data centers. And then you also have SanDisk in the mix. All right, SanDisk, Seagate, Western Digital. These are producers of storage, NAND, flash memory. All right, so you're getting the whole memory trade. And right now, the big hoopla around it is that there's still a bottleneck. Okay, but we're going to go over something that was posted regarding a possibility, a risk to the DRAM, to the memory thesis. Okay, so could derail it. We'll get to that here in a moment. Gold, up 4 points. Not too bad, I guess. So let me take a look at the chat because I see we are blowing up here. Let's see. We have from Bond, like quantify liquidating lays just as semis took up. I was up 40%. Oh my God. I would be so sick. Oh, that would be sick. Let's see. Rex trading their weekly growth for new weekly jokes. Says Rotstamon. And they got a new photonics one coming out. Yes. I think a lot of these fund managers, since seeing the success with DRAM, they're starting to move into thematic plays. I would not be surprised if we start to see a slew of new thematic ETFs. As a matter of fact, we're going to go over Amplify. They got a bunch of them coming out. But we're seeing, other funds like X funds come out with, very specialty niche type of ETFs. You had Weapon, you have Nukes, then you have Dermy that's coming out, which I think is going to be a big competitor to, Chippy and Soxy. But you also have KMEM from Curve. And I mean, everybody loves Curve right now. Everybody loves X funds as well, for blocks and some of their other funds. So I will not be surprised if there's going to be a run on investor demand, right? Investors are going to be having more optionality, more choices. But I think a lot of people are happy with Chippy just by itself. So let's see. So I've been saying DRAM and Spacey for over a month, says Dividend Degenerates. That is true. I definitely have. He's been talking up Spacey for a minute. Let's see. And I want a good photonics ETF to complete the trifecta with memory and space. And there is a good ETF coming out for photonics from Roundhill. Again, Roundhill just keeps on hitting these bangers. They're going to call it Light. LYTE is the ticker. It is coming out to a brokerage near you sometime in the next 30 to 90 days. All right. Okay, cool. Got through some of the comments. Again, appreciate all of you guys. Yes, and EUV is a photonics play, but it only makes up, I believe, 25% of the holdings of that ETF. You have lithography, you have semiconductor chain, TSMC, and you also have opticals in there as well. So it's not just the photonics in there, but you do get exposure to some of the big photonics names. All right. So let's see. Okay, cool. All right, let's move on from that. So got to give a quick shout out to all the community members that got in on ASPI. All right. I've been talking up this damn stock for a little bit. And, again, credit and shout out to Padre, i.e. Victor in the Discord. He is the one who found this and kind of gave us the DD, at least a light DD on this, and doing a little more due diligence in that. I mean, it's a no-brainer at this. For me, it was a no-brainer, right? I'm not saying you guys go out and buy it, not financial advice, do your own research. All right, let's get a quick round of applause for that. 24% on the day. Absolutely amazing. All right. I mean, just over the past 5 days, up 34%. Okay. Over the last month, 22%. Year to date, up 23%. All right. So hopefully we can keep this momentum going. This is a small cap company, so there is a lot of risk with this. But why did the stock pop all of a sudden today? We talked a little bit about this before, and it seems that I lost my article. There it is. Here's the article. Okay. So it popped because of this news right here. ASP Isotopes implements engineering enhancements to Silicon-28 enrichment facility based in South Africa, I believe. Successfully restarts first 18 stages of Silicon-28 enrichment facility. Commercial shipments of enriched Silicon-28 expected to commence in Q3 2026. So that's not that far away. So hopefully we get some more fidelity on who these contracts are for, because I can't find any information on them. They actually have a big contract with a semiconductor company at the moment. So what the heck is Silicon-28 and why is it so important? And also there's another part of ASPI I think people are not looking at. We did cover it in a previous stream, and that is QLE, Quantum Leap Energy, that is coming out. They will be, or trying to be, the second manufacturer of HALEU, which is a uranium enriched nuclear fuel, right? The only competitor they have in the space, basically the market leader of one, right, is LEU, all right, Centrix Energy, or Centrus Energy. So let's talk about this one, all right? All right, so this is ASPI, all right, an advanced materials company focused on developing technologies, processes for the production of critical materials used in multiple industries. Today announced that the company has successfully restarted the first 18 stages comprising segments 1 and 2 of its Silicon-28 enrichment facility located in Pretoria, South Africa. Okay. So this is coming directly from them. While the core enrichment technology has been operating in line with our expectations, many of the non-core components did not operate in line with the specifications provided by the OEM suppliers. Head of engineering at ASPI said, the engineering team have worked tirelessly over the last 9 months to correct these peripheral issues, construct a plant that is designed to be safe and efficient. So what the heck is Silicon-28 for anyone who never heard me talk about this, and why is it so important? Quantum computing. All right, quantum computing. This is the next phase of this AI trade, is going to be quantum, or the next theme, whatever you want to call it, right? In quantum computing, the purity of enriched Silicon-28 allows qubits, the fundamental building blocks of quantum computers, to hold their intangible state for significantly longer before collapsing, a persistent challenge that has historically stood between quantum computing and real-world commercial use. All right, so maybe we've covered it on the stream, or maybe you've done a little bit of your own research, but basically quantum chips or quantum computers, what makes them special versus CPUs and GPUs is that quantum chips or quantum computers can both be on and off at the same time, right? But the problem is that they can't stay in that state very long. Something as simple as a vibration from sound can actually destroy the qubit and revert it back to its like a 0 or a 1 state, right? Which is not good. So anyways, I know that might be a little above, but the point is that Silicon-28 is extremely important in the manufacturing of quantum computers. Okay. It has also demonstrated that enriched Silicon-28 has superior ability to conduct and dissipate heat. This property may allow it to meaningfully improve the performance and reliability of conventional semiconductors. So maybe in the future, we'll see something from AMD or Nvidia or Qualcomm or ARM or some other semiconductor company out there that is going to talk about this, new and improved heat dissipation substance known as Silicon-28. All right. It is a moonshot at this point, but they have not announced who it is, but they do have a contract with a semiconductor company. We just don't know who. All right. As we scale our production capabilities over the coming quarters, both these applications will be central to our strategy, said Stefano Morani, president of ASP Isotopes. We have seen considerable interest in many isotopes to enable the next generation technologies. Here it is. The company has previously announced that it has signed 3 commercial contracts for enriched silicon-28 with US-based customers, requiring it for quantum computing and next-generation semiconductors. So that is why this stock popped today on this news. So if, again, shout out to anyone that did get into these names or into this name. I'm holding it for the long term. The other part of this is, QLE is going to spin off from ASPI. ASPI is also trying to do the Hallyu thing, but what they're going to do is they're going to spin off that portion, that division of the company, and turn it into its own company, ticker QLE, which is set to IPO sometime in the future. The beauty of owning ASPI at the moment is you get the Silicon-28 exposure, but you also can potentially get shares of QLE in the future. They did make an announcement that current ASPI shareholders will get QLE shares once the company goes public, right? And again, that will only be 2 companies in the United States that produce Hallyu. Okay, LEUs, again, it's the Microsoft of that world. Okay, it's the only one actually. The other company is based in Russia, and as you guys know, the United States kind of sanctioned Russia at this time. So that is news regarding ASP Isotopes. Again, very bullish on the stock. I just like the stock. Bitcoin not doing jack squat today. Again, up a basis point. Had actually a pretty nasty fall. All right, a lot of Twitter space was freaking out about this, saying something about dark pools and yada 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 is going to go to zero. I mean, I don't know. I don't really care, to be honest. I mean, this is just another day in Bitcoin, right? Another day in volatile Bitcoin. But we did have some interesting information come out from Grant Cardone. You guys know who Grant Cardone is, all right? 10X rule. He's also a huge real estate guy, built his wealth in real estate, runs a huge REIT. And he's also famously getting into Bitcoin, but not just Bitcoin. He started, basically he combined Bitcoin with his real estate holdings. And, his real estate, like if you invest in the fund, one of his funds, you'll actually get REIT exposure, real estate investment trust exposure to commercial, multifamily, malls, office buildings, etc. But you also get exposure to Bitcoin, which honestly is really a really cool thing. So, but anyways, let's listen to what he had to say about this Clarity Act, okay? Because I thought it was really interesting, this little clip.
Do you think the Clarity Act, I mean, I'm personally not too concerned about it. Like, to me, it's a no-brainer. It's going to get approved. Mm-hmm. What do you think that does to Bitcoin the day after?
The day after, I don't think it does much. The 6 to 12 to 18 months after, I think it does a lot. Because I think that's what gives these major companies and major institutions the green light to say, now we can systematically, quarter by quarter, deploy 10 billion, 20 billion, 50 billion per organization, whatever that number is for them. And the other thing I think we'll see is a lot of the sovereign wealth funds in the Middle East that also take their lead from what happens with the regulatory clarity in the US, that will allow them to sizably, aggressively purchase up as well. And one of the things we've even seen over the last year is every time there's been a major drawdown in Bitcoin, groups like Mubadala out of Abu Dhabi, like they're systematically acquiring this Bitcoin when they think it's at a discount. So they're not only doing like tripling their positions.
Yeah. Do you think the
So, again, thinking that once the Clarity Act gets passed, that institutions, hedge funds, sovereign wealth funds, family offices, etc., they will be able to buy Bitcoin, right? Or they'll be able to buy most likely IBIT. In my opinion, it's probably going to be IBIT because it'll be an ETF. They won't hold the spot, Bitcoin itself, which honestly is not a bad thing either. So I just thought that was interesting. It was an interesting take on why the Clarity Act is so important and, its potential for getting passed this year. Shout out to the 80 viewers on X. Really, really appreciate you guys joining me. So one thing about IBIT that I didn't even know this. It was actually really interesting to find this out. There's currently 30%, a little over above or under above 30% institutional ownership of IBIT. Okay, the rest is made up of retail or non-reporting investment, whatever. They don't file 13Fs. But 30% of institutions, or I'm sorry, IBIT is owned by 30% of institutions. And I thought that was really interesting. So I wanted to check, and you guys can check out this website. It's called Quiver Quantitative. You guys can put in a ticker here and just see which institutions own this, etc. I mean, it's actually kind of nice. But anyways, Outside of that, I thought this was really interesting. All right, these are all the latest reports. So you have May 15th, 16th, 15th. So we're going to just sort this real fast. So here's May 26th. Okay, so these are all the management funds, hedge funds, institutional, ownership, banks, whatever. This is where they all own them, right? This is all the people that own IBIT. And like you're looking here because the market value, right? It's under $1 billion, right? So, or under $1 million for some of these guys. 741,000. I mean, kind of a drop in the bucket when you compare it to some of the other big dogs. Here's 2 million here, 4 or 5 million, 85 million from Pine Ridge Advisors. They increased their stake just by a little bit. Currently, they own 2 million shares of this of IBIT. Okay, then you have Sunbelt, 329K. Gateway, 122% increase, 1.88 million. But one of the names in here I thought was rather interesting. So you have Millennium Management, one of the biggest hedge funds out there. They own quite a bit of IBIT. They own 19 million shares of IBIT. They cut a good portion of their exposure recently, as of May 16th. That's when they reported it. But you also have Bank of America in here. You have 0.72, Magnolia, but there's also Bank of America in here, if I can find them. You have Cantor Fitzgerald, so that's Lutnick's old firm. Let's see what else we have. Evercore is a big one. Look, Title's in there. Look, Title owns a little bit of IBIT. Look at that. I didn't even know that. I just saw that. Title Investments. Look at them. The creators of Yield Max right there, and the ones that have their hands and fingers in every fund out there. They own some IBIT. That is actually news to me. I did not even see that. But here's that Abu Dhabi investment. Okay. The Abu Dhabi investment, they reported May 16th that currently they own 8 million shares of IBIT. I saw Bank of America, and so here's Bank of America. They increased their stake 35% to 972,000. They have about $37 million in it. Now, I point this out because what I find interesting is you see all these fund managers, all these wealth funds, all these wealth advisors, banks, institutions, etc., all buying IBIT. But that's not the story here. And I'm trying to remember my point. Oh my God, I can't believe I don't remember my point. All right, you know what? We're gonna skip it. I had it and I totally lost it. Do I have an article on it? I do not have an article on it. Damn it. Anyway, sorry about that, guys. Anyways, I was going somewhere with this. Oh yeah, Stretch. Thank you, Stretch. Yes, I wanted to talk about Stretch. Okay, so Stretch has been buying Bitcoin by the billions. Okay, by the billions. Now think about that. They Stretch, STRC from MicroStrategy or Strategy, MSTR has been buying Bitcoin by the billions. You have all these huge funds, institutions, etc., putting in, a couple $100 million here, maybe a couple, 20, tens of millions here, hundreds of thousands. But Stretch by itself has already accumulated close to what, $8 or $10 billion worth of Bitcoin by itself. So I just thought that was a really interesting thing. And institutional ownership in Stretch it pales in comparison to the retail, to what retail owns in Stretch. Retail owns more Stretch than institutions. So I thought that was, again, just an interesting point here. But anyways, let's move on to our first piece of news, and that is Rexshares going to be liquidating. All right, Rexshares is officially liquidating their funds. Okay, so we already got, all of X, pretty much all the high yield space kind of already covering this. Okay, but for anyone that is invested into Rex ETFs, this is not a negative thing on the company. I don't believe so. If anything, this is just probably, it takes almost 150K to run each of these ETFs. At least that's what I've been told. So 150K per these ETFs, and maybe it just did not make sense to keep these going because there was no AUM for these, right? MSTR by far is the most hated company out there. Whether it's Roundhill, formerly Rex, or Misty or MST. MST got delisted, I think, from Defiance. So that's not even there anymore, right? It's just people kind of got burned so bad that they want to get out. I can never see people buying Lily. All right, Hood has also been down quite a bit. It's down 45% year to date. So I can see why people are just getting away from Hood, right? Palantir, I'm actually a little surprised about. I thought they would have kept Palantir. The one they did keep, and the one that it makes sense, they're keeping NVII, right? The Nvidia growth and income ETF, right? Because Nvidia is not going anywhere, and there is still a lot of demand for Nvidia, and they've been doing really well, I'm sure, with assets, right? But CoreWeave, again, I mean, people would probably invest in the actual stock versus owning this ETF, cover call, leverage ETF. Coinbase, same thing as MSTR, just in the gutter. Same thing with Hood, right? Actually, Coin has been doing a lot better than Hood on share price this year to date, which I found was surprising. If you actually line up Hood, Coin, and IGV ETF, it actually kind of paints kind of a neat picture. But they've all been dropping. But Coin has actually fared better than Robinhood, which I thought was interesting. So once you eliminate most of these ETFs, I mean, you don't really need a growth and income universe ETF, a fund of funds. You really don't need that anymore. So, this is why they're getting rid of it. But it does look like Rex is starting to move into the thematic game, right? They want to release some thematic ETFs because there is one in the works. And that is, thank you, Skeptic, in the chat for posting this to the Discord. But we have, you guys can't even see that. How awkward. Let me get this. Boom, paste that. All right, there we go. So Rex is actually getting in the thematic game. Okay, so they're going to be releasing a photonics ETF sometime in the near future to a brokerage near you, right? They just dropped this May 26th. So again, I think a lot more fund managers are probably going to start moving towards that. You don't need a universe of cover call funds, leverage funds, and all this type of income funds. I won't be surprised if Roundhill starts to also follow suit, right, and start to kind of get rid of some of their weekly pay ETFs. I would not be surprised because this is kind of telling. I mean, this is telling right here. This is the investor. This is investors telling a fund manager, hey, we don't want this product anymore. And again, I would not be surprised if Roundhill also goes through that churn for the weekly pay series as well. I don't know what the assets under management are for some of the holdings that I have. Last I checked, I mean, they were still in the multiple of millions. But again, I mean, that number is going down, obviously, right? As the longer some of these names stay down, like Palantir, MSTR had a nice little bump, or even Robinhood. So I would not be surprised if those names end up on the chopping block. All right, so cool. Just some thoughts there that I wanted to share regarding this. Let me check the chat. We got to wait on MSTW recovery first. That's all I'm talking about, Grumpy Toe. Hey, come on, Roundhill, man. I did you guys a solid, all right? I hyped you guys up with DRAM. Like, cut me some slack. Let me wait for MSTR to recover, and then ergo MSTW, all right? Yeah, I am super bullish Bitcoin and Ethereum. You're not going to shake me out. As a matter of fact, I posted to my X account. They're going to make it so boring that the only choice you have is to sell. And that really is when it starts to go back up, right? And I'm kind of quoting British Hodl here. British Hodl, YouTuber, covers Bitcoin, etc. But he called this months ago. As long as I've been following him, which was basically last year, he said institutions, once they step in, they're going to make the asset so boring. They're going to shake out all the weak hands, all the paper hands, all the people, all the fear, doom and gloomers, the thousandaires, people with like, $1,000 in Bitcoin. They're going to shake them all out. And then they're going to come in and take all the Bitcoin, right? They're going to come in and take all the IBIT. They're going to own it all, right? And they're going to kick out all of retail. And they're going to get the actual Bitcoiners, the people who own the Bitcoin, they will get them to sell, right? So I remember that quote. It is something that I keep very close to me because it really does feel like that. Ethereum and Bitcoin is just so boring right now. All you see is fear, doom, and gloom. You don't see price action like you want, and people are getting shaken out. But for me, I'm not going to get shaken out. Same thing with MSTR. I'm irresponsibly long and bullish on MSTR. But my thoughts anyways, those are just my thoughts. Don't borrow my conviction. Okay. People have to understand that as well. When you invest in these names, invest in these coins, invest in these, whatever, you got to have real conviction. Just having, some BS, borrow conviction, paper handed conviction, you're going to sell at the first sign of trouble. So anyways, let me get past that. So we got Marcia. I don't think I've ever seen you chat before. So, hey, good evening and welcome. And thank you for joining. All right. Yeah, I mean, for me, it's one of my largest positions as well for MSTW. At least I hope that's what you're referencing. Okay, moving on, ladies and gentlemen, we kind of covered the Rex news. We're going to get into some kind of macro news, market news, and then we're going to get into the memory stuff. Okay, we're doing okay on time. We're about 30 minutes, so I want to keep be respectful for your guys' time. So let's move on to some macro news. All right, this is geopolitics. Again, don't care what your politics are, good, bad, left, right, blue, red. I don't care. We just have to follow what is happening in the broader world so we understand the impacts on the market. And the market has been pumping pretty much because we think we have a deal, a real deal just on the horizon over the next couple of days between the United States and Iran. So hopefully that'll bring down oil. All right. Hopefully that'll bring down the energy costs. And we can get back to this bull market. But again, you still have some risks out there, some shocks that will still be felt because a lot of those facilities in the Middle East that got hit, the energy production facilities, it's going to take time to repair. And not only that, it's going to take time to turn on. All right. It doesn't turn on, in like a day or two. Some have said that it takes weeks, if not a month or so, to turn those facilities back on. All right. So anyways, let's listen in on this negotiations continue between the U.S. and Iran.
Situation in Iran, the rising tensions. There was, seems like a shooting war. I don't know. What do you call it?
Yeah, it feels like that. Good morning, guys. CENTCOM said last night that the U.S. had conducted strikes on targets in southern Iran, including boats suspected of laying mines in the Persian Gulf, after a weekend of apparently intense negotiations between the United States and Iran produced no results. In a social media post on Monday, President Trump raised the possibility that a shooting war could erupt again, writing, "Negotiations with the Islamic Republic of Iran are proceeding nicely. It will only be a great deal for all or no deal at all. Back to the battlefront and shooting, but bigger and stronger than ever before, and nobody wants that." Now, the president mocked his critics, some of whom suggested over the weekend that he risked signing off on a deal that failed to achieve his war aim of ending the Iranian nuclear program and left Iran in a stronger position than before, with de facto control over the Strait of Hormuz and the ability to charge ships for passage, generating enormous new revenue for the regime. The president wrote, "I laugh at all the dumbocrats, rhinos, and fools who know nothing about the potential deal I am making with Iran." Meanwhile, Iran's foreign ministry spokesman said in a press conference Monday that a large part of the issues under discussion have been concluded, but that negotiators were not discussing nuclear details. He also said that although Iran is not collecting tolls in the Strait of Hormuz, the strait should be managed by the two countries that flank it, Iran and Oman. He said the two countries are drafting a protocol for ships to transit that would involve paying what he called fees to the two governments. Now, the president also said on social media that he is mandatorily suggesting that the remaining countries in the Middle East sign on to the Abraham Accords. That was the agreement to establish economic and diplomatic ties with Israel that he led in his first term. Trump said Saudi Arabia and others should sign on as part of the Iran deal, but that he would accept it if one or two countries did not end up signing. Guys, back over to you.
All right, that's all we're going to cover. So essentially, the United States was ferrying some boats or something, and I guess they saw a couple of small boats, Iranian small boats that were laying mines. So then they took them out, and then they got attacked, and then they struck a couple of missile sites along the coastline. And then, Iran, there's, again, a ton of news coming out during this time. Iran saying, hey, no deal, every deal is off. And then apparently Iran sent a delegate to Qatar to discuss the frozen assets that they have that belongs to Iran. They're not going to give up the uranium. And then they're saying, hey, the U.S., is saying that, hey, we still want that. That's a big deal in all of this. We can do a ceasefire for 60 days while we negotiate the uranium piece. Iran wants to put or implement a toll. I mean, there's so much. It's a pretty fluid situation. And again, you don't know what to believe, especially out there, because there could be a lot of misinformation peddling happening, especially on X, especially in the larger media sites, because they're citing anonymous, sources. So at least we know that they're still talking even after the strikes happened. An Iranian spokesman did come out and did say that, hey, as long as there's no more further escalation, we can continue with negotiations. So that is really where we're sitting at. Hopefully something comes out today. Marco Rubio, Secretary of State, was coming out and saying that, hey, United States is not going to accept any deal. It's got to be a good deal. So we'll see. All right. So we will see. All right. So moving on from that, we got Ed Yardeni talking about a quick price target of 8,250 for the S&P 500 for this year. That sounds crazy, just because not too long ago we were talking about 7,300 and now we're talking about 8,250. Ed Yardeni, pretty popular fund manager. He's out there. He's a CNBC contributor. We've listened to him several times before. So let's quickly listen into this, and then we're going to get into our memory story, because again, this could impact DRAM and this could impact the memory thesis. So we will be covering that here momentarily. All right. So let's just get through this piece.
Okay, to join us now, Ed Yardeni, president of Yardeni Research. He came swaggering in here like he knows everything. You've been
No, I don't.
You've been right though.
Thank you.
You are welcome. Last time you were on, you went from, I think you went from 77
7,700 to
on the S&P.
8,250.
To what?
8,250
By
the end of the year, and 10,000 by the end of the decade.
Tom Lee recently has said best couple of years that we're going to see in the stock market in his lifetime, or something similar to that. You've got some non-obvious reasons to make that case, don't you?
Well, I think it's actually the obvious reason, and that
Earnings?
is earnings. Yeah, I've been recently talking about FOMO versus FEMO. FEMO's fabulous earnings momentum, and that's really what's been driving the market, not FOMO, not fear of missing out.
So it almost makes sense. I guess when I said not obvious, I meant given what's right in your face that causes people to think, oh my God,
of course,
sort of, all the things that make you
worry about.
the people that they consistently build the wall of worry that the market climbs.
Yeah, I think what's been largely missed is the resilience of the economy. The economy's kind of like Rodney Dangerfield. It's been getting no respect.
And then we got to figure out what is responsible for that. We know it's the greatest economy in the world. Yeah. It always will, always has been. But then what else? Is it AI? Is it deregulation?
I think, what was about in 2024 that everybody was talking about American exceptionalism, and then that the whole thesis kind of fizzled out in 2025. But we have amazing capital markets. There's a tremendous amount of capital available for innovation that's driving the technology revolution. The technology revolution is driving productivity, and productivity is fairy dust. It makes everything better in the economy, better growth, lower inflation, real wages go up, and profits are great.
I mean, you look at the rest of the world, and all you have to do is look at the leading companies in any industry, especially technology,
Right.
over the last even 20 years, even back to Google, or even anything involving the internet. You got Amazon, then you got social media, you got Meta, and now you got AI. It's all happening. Biotechnology or pharmaceuticals. It's all here.
Yeah, it's all here.
Why?
Well, I think this is still a very entrepreneurial society. There's a lot of people that are constantly looking at opportunities to come up with better products, better services, cheaper, better. And we do creative destruction better than anybody else. Famous economist way back when by the name of Joseph Schumpeter said that, that's what entrepreneurs do.
He said a lot of smart things, especially about the permanent leisure class, which ends up being so well off that they think they don't need capitalism and don't realize capitalism is where it came from. There are people pointing out that in terms of risk premiums, or premia, that we're at a point similar even to the bubble. There is froth, there's call buying, there may be some disconnect between fundamentals and the lofty levels.
We've only had a few crashes, right? We had a crash at the beginning of last year. It turned out to be a great buying opportunity. We had a crash in March. It turned out to be a great buying opportunity. The market.
The best one was in the pandemic at 2,300 on the S&P.
Yeah, that was an amazing buying opportunity. So I think there's a tremendous amount of wealth in the U.S. on a global basis that wants to invest in the U.S. And I think there's earnings is what's driving it all.
So just real quick, because he's touched on a couple of key points, and we talked about this before. Right now, the stock market is kind of like in this K-shaped, market, where a lot of sectors are not doing so hot. But what's keeping and propping up the S&P 500, the market, is the AI trade. Again, just for any new viewers, all right, because we got a ton of people on X, 66 viewers on YouTube, 111 on X. So thank you guys for joining in on this stream. Real quick, going back to the AI trade, you still have $700 billion in CapEx being spent on the data centers. Okay. at this current time, and it's expected to rise to 3 to 4 trillion by 2030, right? According to Jensen Huang in his investor presentation. And a lot of different research firms are also broadcasting, at least $1 trillion next year in infrastructure spend. Okay, so you got to start thinking, what are the derivatives of those data center build outs? We've covered it before. You have not just the semis, not just the software names, the hyperscalers, but you're going to have, the memory, you're going to have optics, you're going to have photonics, you're going to have lithography, you're going to have HVAC, you're going to have construction, you're going to have just everything else under that. Then you get into power, you get into metal, you get into utility companies, right? I mean, all of this money is being spent. You still have some of the biggest IPOs ever to hit the market soon. SpaceX being one of the biggest ones. One of the biggest fears right now is that the entire market, the index holders, the retirement accounts are going to be used for exit liquidity from these LPs who are currently in SpaceX, LPs being limited partners. And that will cause, basically kind of an effect where, it could drag basically the market down. But along with that, the people who do cash out after the lockup period or the rolling lockup periods, if they do cash out, they're going to put the money to work, right? They're going to go buy their Lambo, whatever, buy a new penthouse on the beach. But they're probably going to reuse that money and put it back into the markets, investing in other companies, right? So again, it's just this is what's really driving the market to climb higher and higher and higher. And we see this rolling sector rotation happening since the beginning of the year, right? We see this going from software to semis, then to memory, then to miners, and then to now it's photonics, then it's optics, and now it's going to be space, satellites. I mean, there's just so many rolling waves of sector rotations happening, right? And these are all names that have to do basically with the AI theme. And now you have quantum also taking a huge bid up to the upside because the Trump administration recently announced a couple of stakes in some quantum names, D-Wave, Rigetti, if I'm not mistaken, D-Wave for sure. And I don't think IonQ was a part of that. But there's also like Quantinum that's set to IPO in the near future. That one is going to make a lot of waves as well. So again, just a lot of crazy things happening. And then we have from G Nation, Iren, Sive, CPSH, TE, right? Not financial advice. These are some of the biggest names right here. TE, I actually do have a small position in. I can't buy Sive. I'm on a Robinhood, which is a children's brokerage account. Not really, but they don't allow international markets, unfortunately. I have not seen the ticker CPSH. TE, surprisingly, is an energy company, a utilities company, if I'm not mistaken. I didn't even do any freaking due diligence on this name. I just bought it. But Leopold, which is this young hedge fund manager, he was fired from OpenAI. He's been making some insane calls as of late, and a lot of people are waiting for his 13F filing, and he does have a holding for TE. But he called Coherent. I think he called Light. He had like some crazy returns on some of these names. G Nation also, so he posted that twice. So anyways, so Ed Yardeni is kind of expecting, this continued uptrend. We already had kind of the market crash happen, back in end of March, early April. That 10% dip on the S&P 500 was about 12% on the Qs. We had the, Liberation Day from last year. So, I mean, do we just continue this run? But also, you have Tom Lee talking about, and several people now talking about, this potential for the market to test the Fed. Okay. We've seen charts. I don't have a chart handy with me, but we've seen charts where whenever a new Federal Reserve chair steps into the seat, usually the market pulls back. And on average, it's been about 10 to 15%, right? Over the preceding couple of months. So is that going to happen now? It's hard to say yes, because you have earnings that were absolutely blowouts. The hyperscalers absolutely blowing out earnings, right? A lot of tech companies blowing out earnings. So it's hard to believe that we're going to have a market pullback, but what goes up sometimes has to come back down. And the memory trade is definitely one of those sectors. The semiconductors is definitely one of those sectors that might be a little overstretched and might need to come back down to earth. So anyways, just wanted to cover this piece. I'm not going to go too much in depth into it because next up is the memory stuff. Okay. So SK Hynix hits $1 trillion valuation. Huge news. This is a Korean company, the second Korean company to hit $1 trillion. The first one being Samsung Electronics. And guess what? Both Samsung Electronics and SK Hynix are part of the memory trade. All right. They manufacture HBM and DRAM. So that's, a part of why they hit the trillion, right? The company has emerged as a key supplier, SK Hynix, to AI chip giant Nvidia, cementing its position at the center of the global AI supply chain. The rally in SK Hynix comes just weeks after its domestic rival, Samsung Electronics, also crossed the $1 trillion market cap. Back in January, SK Hynix announced plans to establish a U.S.-based AI solutions unit and to commit at least $10 billion in investments. So absolutely amazing here. Shout out to anyone that probably has SK Hynix in their portfolio, or at least if you're in DRAM. Micron tops $1 trillion in market cap as UBS raises price target to new Wall Street high on memory momentum. This is absolutely crazy that they raised the price target on Micron. Okay, and I'll tell you, we'll go over it. All right, Micron shares soared nearly 18% to hit $1 trillion in market cap on Tuesday after UBS raised its price target on the memory maker to a new Wall Street high, citing continued strength in the market. Analyst Timothy Curry raised his price target to $1,600, so $1,625 from $535. That's like a 3x return if you get in now. Like, that's absolutely crazy. Well, actually, Micron is stock price is almost 1,000. Yeah, it's $900 basically. So never mind. But anyways, from 535 and reiterated his buy rating on Micron. At the valuation, Micron would be worth nearly $1.8 trillion. $1.8 trillion for Micron. Absolutely incredible. We believe the market will start to put a more normal multiple on the stock, and MU will continue to re-rate higher as details emerge about the structural changes AI has driven to the entire memory complex. Curry added, our supply chain work on long-term agreements across the memory industry suggests that up to 30% of DDR volumes, DDR is the memory, volumes industry-wide will soon be locked in at a pricing that is just slightly below current levels, and these agreements will allow MU to trade some near-term revenue for demand visibility and a smoother earnings profile. So Micron CEO said, and I always bring this up, that their forward production of memory is already bought and paid for. Okay, so I mean, they can't produce it fast enough. They are producing a new fab, I think in Arizona, to help with the production of their memory. But again, that's about a year out, maybe a year and change. So absolutely amazing that these companies are reaching $1 trillion market caps. And that's why we're seeing DRAM just have an amazing day today. Absolutely amazing, up 15%. This is unreal. The S&P 500 goes up probably 10% when annualized over long periods of time, right? And this damn ETF went up 14%, 15% almost in a single day. Year to date, 117%. Absolutely incredible. I see we have Dividend Rocket up in the chat. Good morning from Taiwan. Hey, did you see Jetson Wong walking around over there? If you see him, man, let him know. Let him know we say hi. All right. Tell him to keep that stock going up because today was a disappointing day. But guys, check out Dividend Rocket. He also has a YouTube channel. Definitely check him out. He shares his portfolio, some of his kind of thoughts on how he designs and does it. And he does live off of his portfolio. So the information he's giving you is actual. It's not based in theory. So we also have from Rod Stamon. Hopefully, Dermy ETF by X Funds will be a banger. I think it definitely will. We also have, I saw in the local news, but I haven't seen him in person yet. Man, you need to go to Taipei and let him know, like, try to get that insider info, bro. Come on, you're our boots on ground. You're our boots on ground in Taiwan. You got to let us know what names to buy. All right, what Taiwan names to buy. Okay, moving on from that. Appreciate you, Dividend Rocket, for stopping by. Okay, so anyways, Micron up $1 trillion. Now we have SanDisk also getting a re-rating up. Okay. SanDisk, they create NAND flash memory. They're also part of the whole memory trade. They're a part of DRAM as well. Was in focus Tuesday after Citi upped its price target more than 50% amid strong pricing and demand for storage fueled by artificial intelligence. We already know this. Merchant, ASEA Merchant, who also reiterated her buy rating on SanDisk, said that the long-term agreements signed by the company provide gross margins of 80% or more and offer predetermined volumes, which will grow throughout the duration of the contract. Again, this is that, they already have purchase agreements, already are filling up, demand. Excuse me, let me take a step back. I'm tripping over my own words here. They already have predetermined purchases for their hardware, for their flash memory, for their NAND, everything else that they're offering for data centers, right? So they're taken care of well into the future. Citi expects the average selling price of NAND storage to rise 186% in 2026, with eSSDs up around 265%. So absolutely amazing. They're also, I believe, they're also doing a $6 billion authorization for buybacks, all right, for their stock. So again, that could be bullish. That could be really good for the stock. Again, if the company is buying back their stock, usually that's a good sign, especially for a company like SanDisk that's been seeing amazing growth. Last price, $1,500, almost $1,600. So, God, they're getting what? A price target to, yes, $2,000. Absolutely amazing. Absolutely amazing. Shannon says up 27% on DRAM now, holding and buying on the dips. Excellent. Good to hear. For me, I think my position is up close to 65%, if I'm not mistaken. The saying, as the saying goes, I wish I bought more, but is what it is. Okay. So what can derail this whole thing? This is going to be a part of the big story. What can derail this? What is the biggest risk to DRAM, right? What's the biggest thing that could derail this thesis, this demand? And that is China. We've talked about it on the last stream, where China could actually release memory to the global supply market, and that would derail this whole thesis altogether, right? And sure enough, we had an article come out from Zero Hedge. If you guys don't know who Zero Hedge is, they do a lot of writing on markets, and their writing is pretty damn good. I mean, I follow Zero Hedge on X. I also follow some of the articles that they do publish. Definitely worth checking out. This link is down below in the description if you guys want to go through it yourself. But the idea was, what would impact Micron, what would impact SK Hynix, what would impact Samsung is if China released their memory into the market, into the global market. That would bring down the prices, right? Because there would be a flood of supply to meet that demand. Right now, China is not releasing a lot of that, at least for data centers, right? For US built data centers, there's really no Chinese chips in these data centers at this moment, as far as I know. Unless someone's more educated on this than I am, please let me know. But as far as I know, they want to keep that supply chain completely out of the US data center ecosystem, right? So anyways, they wrote this nice article basically explaining that Chinese semiconductor firms have begun flooding the market with domestically produced DRAM and NAND chips in a move that analysts say will drive down memory and storage prices, offering consumers some much needed relief. And that's coming from Tom's Hardware, WCCF Tech, and TechSpot. These are all tech focused publications. Like I've used Tom's Hardware quite a bit in my younger IT days. The biggest name here is CXMT. That is a Chinese DRAM maker. All right. Changshin Memory Technologies, ticker CXMT. It is not IPO'd yet. It is a private company, but it does have plans to IPO in the very near future. So that could take some of the gas, some of the fuel, some of the momentum away from, some of the names, SK Hynix, DRAM, et cetera, right? But going down here, right? It's a pretty lengthy article. You guys could check it out, but the net of it is that they're flooding the market, the commercial market, but they don't have the memory yet designed for data centers. But it does not mean that they're far behind. They could actually catch up to Micron, to SK Hynix, to Samsung, producing the next generation of HBM or the next generation of DRAM. So while unlike major DRAM manufacturers, CXMT isn't widely seen as possessing the latest cutting edge tools to produce memory for hyperscalers. I.e., the specialty AI memory or the memory used in data centers, Nvidia, AMD, to name a few, right? It is rapidly catching up, though. HP placed major LPDDR5 orders with CXMT in January. Qualcomm began custom DRAM work with the company in April, and Dell and Asus and Acer have all approached the manufacturer. The company isn't tied to any data center contracts for now, so it has largely empty production lines just waiting for customers. The clientele CXMT seems to be targeting is regular consumers left in the dust by the rest of the RAM industry. So the commercial users, right? The people with laptops, the people with desktops, probably other, TVs and things out, tablets and things out there. But that's where they're targeting right now. But is it far off to think that they won't try to get into the data center game, right? And that's not the only company in China that is aiming for this, okay? There's another company out there as well. There was no explicit mention of a price. So for all we know, Corsair, who's a memory maker, is sourcing cheaper memory from CXMT, but still selling it at the same inflated rates. If supply from Samsung, SK Hynix, and Micron is tight, it makes sense that DRAM bought from those companies would be expensive, but CXMT made DDR5 should be significantly more affordable for it to matter and make an actual dent in the market. And then CXMT has been ramping up capacity to compete with global leaders, Samsung, SK Hynix, and Micron. The company offers DRAM dies in 64 gig, 16 gig configs with speeds up to 800 MT or 8000 MT. Other Chinese memory manufacturers such as YMTC and Jia Jinwei are also expanding capacity to produce DDR5 RDIMMs for data center and server deployments. So now you have a couple other competitors in China ramping up production to challenge these three big names that are all pretty much trillion market cap, right? So now you have competitors coming out, but the US market is still keeping those, those chips, those memories out, basically out. We'll see what comes of it. Asus, Dell, HP, all those, PC manufacturers, if they start buying and ramping up purchases of their memory, right? CXMT's updated IPO prospectus filed last Sunday indicates the company is scaling faster and has become materially more profitable than the market had appreciated. And then if CXMT is going after Samsung and Microns of the world with its DRAM portfolio, YMTC is going right after SanDisk. China's largest maker of NAND flash memory chips has two factories with a combined monthly output of 200,000 wafers. YMTC's third factory in Wuhan, oh God, will start operation late this year and has capacity to produce 50,000 wafers per month by 2027. YMTC and CXMT are China's best hopes for establishing a foothold in the global memory chip market, long dominated by South Korean and US players. All right, the big three. So definitely an article worth reading, guys, and going through and kind of formulating your own thesis and updating your own thesis here. The risk, in my opinion, is very low that these chips will start making its way in US data centers. And the reason why I believe that is because the United States, again, is going for a US first approach. They're only going to be doing deals with companies that are either investing in the US, i.e. Micron, SK Hynix, Samsung, right? So they're going to have those deals. But you also have already AMD, Nvidia eating up most of those chips anyways. And those chips are pretty much ahead of CXMT and the other company as well, or that's going to be competing with SanDisk. All right. So again, I think it is a risk. All right. Something to keep an eye on. It is definitely not a company or not a story to discount because that would derail DRAM if China came out with way more efficient, better chips, for NAND, HBM, and DRAM. So what do you all think? Let me know in the chat what you guys think. Is this a real threat? Is this something that could derail the story for DRAM for the major, producers? Is this something that could derail, the semiconductors? Is this a real threat or is this just noise? You guys let me know down below or let me know in the chat, in the YouTube chat. Quick shout out. We did get to about 180 viewers. I'm hoping we get to 200 viewers. That'd be pretty cool. That'd be a channel first. But right now, quick shout out to the 113 viewers on X and to the 65 viewers on YouTube. Appreciate you guys sticking in there with me. All right. So now we're going to move on to a couple of new ETFs that are dropping. We're pretty much at the top of the hour, so we're going to breeze through these. All right. So these are coming to a brokerage near you. Okay. First one up is Amplify. These are all Amplify ETFs. So you remember what I said earlier that I think, a lot of these companies, although Amplify has always been doing this, but a lot of companies are coming out with thematic ETFs. Okay. So there, Amplify said, hold my beer. We're going to come out with a bunch of new ETFs that are all targeting the best 10 or the top 10 of that sector. So right now we have the Amplify Top 10 Defense Tech ETF that was dropped just a couple of days ago. So this will be coming to a brokerage near you in the next 30 to 90 days. We don't know any of the expense ratio. We don't know the turnover, none of that, right? We don't know, kind of that stuff, or what, even the ticker. We don't even know the ticker because that hasn't been filled out yet. But what we do care about is the strategy. Okay. The strategy for each of these. These are not income products. All right. These are a straight pure play on the sector or on the theme. All right. So this particular ETF for self-defense or for defense is going to be investing in companies manufacturing, designing vehicles, weapons, technology, and equipment for the military, defense, and space use. Suppliers, companies supplying companies materials, software, or services to militaries and manufacturers, companies researching and developing solutions for biological, chemical, and health threats. So for an ETF like this, you're probably going to have a Palantir. I could see Lockheed Martin being in this. I could see Raytheon being in this. Some of the usual suspects when it comes to defense contracts. So I can see those. I wouldn't be surprised maybe if like some type of material company, a mining company, maybe like rare earth type of thing is in here. I could probably see that being part of the supply chain. And it says militaries and manufacturers, so maybe it's it's not just going to be for the U.S. military, because there is that NATO ETF out there. So you have I think Rhine Rhine is the company name, which is a defense contractor, I think based in Germany. So potentially you could also have some international exposure within this ETF. They're going to be using a index that they build. All right. And it looks like it's going to be, let's see. The reference index employs a rank-based weighting methodology, takes into account the constituents, securities, momentum, value, and intensity score. The intensity score is a combination of securities risk, revenue assessment, and theme assessment, as determined pursuant to the Bloomberg thematic protocol. All right, so that's how they're going to do the weighting in this ETF. And they're going to have a basket of 10. All right, so they're going to have a basket of 10. And it looks like Samson Asset Management. I don't know if that's Samson Electronics, but is also going to be one of the advisors. So title is not in here. Okay, moving on. We have another one. All right, this is the Amplify Top 10 Asia Memory ETFs. So maybe when CXMT and YMTC drop in China, those will probably be a part of this one. I could see obviously SK Hynix and Samsung being a part of this one, but you also have Taiwan. There's a lot of semiconductor companies in Taiwan that are a part of the supply chain. I could probably see those being in this as well. If you guys want kind of an idea of what those companies are, you could check out a Taiwan ETF. It doesn't matter which one. There's 2 or 3 of them out there, and just go through the names, right? Go through the names, go through the holdings, and you'll find out which ones are the semiconductor names. You can put it into like ChatGPT or Gemini, just upload the holdings list, and it'll tell you which is which, right? So just a quick, fast thing. But what is actually going to fall into this? So companies have a minimum market cap of $1 billion, which shouldn't be too hard to find. Having 3-month average daily trading volume of at least 5 million, have its primary classification under the ACRO's industry classification systems, or AICS, fall within the memory eligible sector groupings. And this is what they're going to be focusing on. Memory eligible sector classification, memory chip production, electronics production manufacturing, memory fab, process equipment, memory fab process chemicals and materials, etc. And they talk about the revenue here. The manufacturing of DRAM, NAND, or NOR flash or HBM devices. Again, just the standard DRAM stuff. Let's see what else they got here. So yeah, and then here's just some additional info. So you guys could check out these. If you don't know how to find these excuse me, these ETFs, I have a video on the page, on my other page, how to search the SEC Edgar database. But you basically go to the database and you put in Amplify ETFs, and it'll spit out all of these ETFs, so you guys can go in and dig through it at your leisure. But that is, essentially what this ETF is going to be for. So the top 10 Asia Memory ETF from Amplify. We also have another one. All right. The top 10 nuclear ETF. Again, we don't know anything about it other than the strategy. All right, you guys can go through the strategies and figure out what they're going to be buying. Uranium companies that engage in mining and enrichment of uranium fuel. There's that nuclear fuel thing that we spoke about earlier, ASPI, HALEU, etc. Power generation. So maybe you might have like a company like Oklo or XE Energy in here. Oklo got a huge bid yesterday, or today rather. I think it's a contract with the Department of Energy to basically, provide fuel, I think, provide recycled fuel, something like that. I didn't really read into it. Equipment engineering procurement, companies that provide engineering construction services for nuclear power plants, okay? Manufacture reactors, so you're gonna have the SMR names in here, manage nuclear waste, or provide other equipment services for nuclear generation, all right? And that, again, is the Amplify Top 10 Nuclear ETF. All right, we also had the MAGS ETF, the MAG-P ETF coming out. It's basically going to be MAG 7 plus, Broadcom, OpenAI, Anthropic, and SpaceX, right? So you're getting these really, really like top of the food chain. We had the Trillion ETF coming out. I forget who's coming out with it. I know it's not Defiance, but we covered it in a previous episode. But it's a trillionaire, ETF. It's going to only hold a basket of companies that are above the 1 trillion market cap. So now you're going to have, the Micron. Maybe you even have the SK Hynix and the Samsung in there. But we also have top 10 space ETF from Amplify. All right. We have a top 10 quantum ETF from Amplify coming out, top 10 robotics, and, top 10 semiconductors ETF. So we got a lot of ETFs coming out from Amplify. I think it's going to be interesting when these ETFs come out. Again, these are all very thematic ETFs, and they all really trade under the AI theme when you think about it. Maybe not so defense tech, or I would almost consider space as part of that, because it's no longer about space exploration. It's about data centers in space. That is the new story, right? That's the new narrative for space. And again, it's going to be used for AI, right? It's going to be a derivative of AI. All right. So let's see what we got here. Farouk, welcome back, man. I haven't seen you in a minute. Hope all is well. Once the moat is built, it's very hard for these companies to cross it, says Farouk. And we have, I guess you were referencing the DRAM story. At least that's what I think you're referencing. We also have from G Nation. What do you think about the Bank of Japan dumping U.S. bonds and hikes in rates? I don't really have an opinion one way or the other. I don't really have like a thought about it. You have several different countries dumping U.S. treasuries, right? I don't know. Like I don't think it's a big deal. I don't think it's a big story there because it happens every other day, right? Every other day, some countries dumping USTs, and then I don't know, and then I don't know what they're doing with the money. But I will say, from a macro perspective, from a geopolitics perspective, I think what the U.S. has done is basically open a can of worms by one, sanctioning Russia, taking them off SWIFT. And then doing the same exact thing with Iran, minus the SWIFT thing, but basically freezing all of their assets. All these countries that have money in UST, US treasuries, and basically the United States is weaponizing that stuff, right? So this not only creates a narrative that, hey, we can't trust the United States because if we don't play ball, then they're just going to freeze our assets. This is why you have a lot of central banks buying gold like crazy. And this is why Bitcoin makes even more sense. And this is why Iran was saying, hey, we will provide you Hormuz insurance, but you have to pay us in Bitcoin, right? Because it's outside of U.S. financial control. And again, I think this whole thing, if you really look at it from a big picture, it has really damaged the reputation of USD and USTs. And, again, if you don't play ball with the United States, they're just going to take or seize your assets. This makes it even more bullish for people stockholding or stockpiling gold and for Bitcoin. All right. That's really my thought. The hikes in Japan. I mean, I don't really follow Japanese economics as much. I know, at one point there was a yen carry trade and that blew up for a lot of people. But again, I don't really follow that stuff. Amplify new funds. Says Bond. Yes. So we covered all of these. There's 7 of them. These funds sound pretty interesting. I would say so as well. Again, they're all playing on these very unique themes. Defense, XAR is a ticker. It's a aerospace and defense ETF. It's been catching a bid lately. And again, if you're a believer in kind of this whole narrative of super government cycles, they're going to be spending a lot on defense. And, you know, when you spend a lot of money on defense, these ETFs that are holding those defense names, you know, should profit from that. But more so to the point, you're printing a lot of money. All right. This goes into a whole other story, right? The Fed is stuck between a rock and a hard place. Doesn't matter if they cut rates. Doesn't matter if they stall. Doesn't matter if they raise rates at this point. The U.S. is going to print. If we start heading into a recession, the U.S. is going to print money, right? And again, when you print money, the Trump administration wants to spend 1.5 trillion on defense spending. Who do you think are going to be the winners of that, right? We have the Golden Dome also a part of that. Who do you think the winners are going to be of that, right? Right now, there's a contract out for several of these names. These are Lockheed Martin, Raytheon. You have SpaceX in the mix. You have Palantir in the mix. I think Rocket Labs is also in the mix. So you have all these names in there. And I mean, who's going to be the winners of that? And all of that money, all of that spend that the government is spending on defense. Let's see. So what are you guys' thoughts on Blocks ETF? I did pick up some RVI. Asked Aaron. Blocks ETF, I like it. I like David Nicholas. I think he's a great fund manager. Some of the interviews I've seen him talk on, one of his biggest things, one of his biggest I don't know how to phrase it, not his goal, but his focus is that you can spend the distribution guilt-free, right? Like he wants to create a product where you're going to get not only appreciation, but that income, and that income you can go spend without having to reinvest 90% of it, right? So I like blocks. I do like blocks. There's a huge blocks community. There's some blocks maxis out there, which is hard to believe that there is such a thing as a blocks maxi. I think David Nicholas has been doing a phenomenal job managing that ETF and really providing a good ETF, on down markets and on the way up, right? It's not capped. There's like no capped upside realistically with that ETF. You have exposure to Bitcoin, Ethereum, the mining companies. He put NGHT in there, which is night. It's a night ETF. Basically, you capture the nightly gains of Bitcoin's movements, and then it moves to treasuries around when the market opens. So I think that is a really interesting product, all things considered. So I like blocks. I don't own it. I'm already way too heavy into crypto Bitcoin. Again, I have BMNR, I have IBIT, and I have MSTR and MSTW. So I'm irresponsible when it comes to like crypto exposure. But I do think blocks is a fantastic ETF. A lot of people are sick right now because they sold at a huge loss, and blocks just ripped up, right? As Bitcoin continues to move up, that blocks ETF is going to continue moving up because there's a lot of names in there that are basically proxies for Bitcoin, right? So anyways, ladies and gentlemen, we are at basically an hour and almost 15 minutes. That will do it for this stream. I hope you guys enjoyed it. I hope you guys got a lot of value from it, at least a little bit of entertainment. I hope you found something in the stream that can help you. So I appreciate you guys. All right. Again, a huge shout out to the 100+ viewers on X and to the 50 viewers on YouTube. Again, really do appreciate all of you joining in for this stream. All right. As Trademan says, don't forget to hit that like button or follow. All right. I do appreciate it. It does help out this channel quite a bit. All right. And with that being said, I will see you guys in the next episode. You guys have a great evening, great rest of your day, wherever you are in the world, and I will catch you later. Take care.